Is it time to sell your property right now in this opportune market? I'm going to give you a few reasons why it actually may be a good idea to sell your property, even though I'm a big believer, like big believer of buying and holding onto your property forever with what is essentially the buy, borrow, die methodology. Now, I'm going to give you my rationale in this video to make sure that you understand why I'm saying it may be opportunistic for you if you fall into this category. So if you are looking for some help on selling your property right now and you found some of the logic in the video resonating with you, you can book a call with me to see if it actually makes sense to be selling your property right now. And you can do so by booking a call with me using a link right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen, and I run and operate a RE/MAX in the greater Toronto area on top of making awesome educational content just like this one for you. And if you found these videos helpful on your real estate journey, whether you're buying, selling, or investing, make sure you help me spread the knowledge by smashing that like button and subscribing to the Prime Sub channel. Because at the end of the day, I'm trying to get good information out there so that it helps a lot of people make the right decision in real estate because, you know, let's be real, there's a lot of weird information out there that may not be necessarily data driven or a little bit too opinionated and biased. Anyways, so why am I all of a sudden advocating for selling when, if you have been following along my content, I've always believed and have always said, buy and hold. I still believe that. Well, the reason I'm making it's because I've taken a lot of calls from a lot of people who are struggling to do the latter part of the buy and hold, which is the hold. Most people have just bought, they can't hold, which means that they can't keep up with the increasing mortgage payments on these investment properties, especially their condos that were purchased recently. And that's just kind of what I've been seeing when a lot of people have booked a call with me. And with so little inventory currently, this actually may be an opportunity for you to sell for higher than what you may be expecting. But again, not to, pour water on it or cold water. It's still not March 2022 prices. So just keeping it real, right? I'm going to provide you with the common example that I'm seeing quite often with people who are booking a call with me to kind of just chat and see if I can help them. And I'm going to provide you with the logical rationale why it actually makes sense to sell. It's, something along the lines of this, right? You own a condo that is coming up vacant, and if you put a new tenant in there, you're still going to be cash flow negative, and it's going to be well over $1,000 because of two main things. One, the maintenance fees have gone up. They're all quite high this year after the AGM meetings. And two, the interest rates have gone up. Very common right now, and it applies to a lot of investors that have called me right now, especially if you have a mortgage at Scotia or First National, because your monthly payment has gone up with the Bank of Canada interest rate hikes. And now that your property is vacant, this is an opportunity for you to sell into a market that's actually trending upwards and lacking inventory. Big time inventory, because a lot of buyers are looking for that turnkey, ready to go, picturesque property that you as an investor, if it's vacant right now, can create that kind of inventory for them because you have a vacant condo. See what I mean? So this is especially true if your condo is like, the entry level condo somewhere between like 500 to 650,000. So here's the rational logic, right? If you fill the property right now, you're still bleeding a lot each month just to keep the property, right? Because if you look at a chart over here, which is the monthly condo cash flow index right now, most people are about minus $1,200 per month before any principal recapture or repayment. And even if you count that repayment, which isn't, by the way, the proper way to calculate cash flow, you're still minus $500 a month, which is wild, right? Meaning you're paying $500 a month out of your own pocket to keep that condo. And the only way you are going to make money is through appreciation, which at the end of the day is just speculation, right? So the math just doesn't really add up, especially if you're having a hard time keeping the property and you're concerned economically, and also your job may be in like trouble, right? So this is the part of the buy and hold that isn't being executed, the hold part. You see what I mean? And if you can't hold this property in this current scenario right now for call it 3 to 5 years, because we don't know if it's going to change, this is where it's smart to maybe take some chips off the table and live to fight another day so that you don't actually go bankrupt. And while the bond market right now is technically predicting a lot of rate cuts for the Bank of Canada overnight rate, which may save you in the near future, for the numbers to actually make sense again, we're not bleeding so much, rents would need to increase by another like 20% or so, and rates need to come down by 2% or 200 basis points to even make the numbers worth holding at a smaller cash flow negative position, right? It's wild. So if that doesn't make sense to you, here's the math and how it shapes up, right? This is like, call it your average condo with a Scotia variable right now, assuming you bought it for $650,000, like 520 mortgage right now, which if you got like within the last 2-3 years before the rate hikes, it will make your mortgage like prime minus like 0.5 or minus 0.9. So let's just use the 6%, right? You can see over here. So your rents right now, if you get a new tenant, is about $2,500 rent, meaning that you're still minus $1,200 a month. Yeah. So if rents go up by 20% by the end of the month in this scenario, and this is a super bullish rental increase, by the way, you're still minus $800 a month. Yeah. And if rates come down 1%, you're at minus 100. If you get both of them, 1% come down and rents up 20%, you're like minus 500. So realistically, you need rates to come down 2% or 200 basis points and rents to go up 20% for it to get below the minus $300 a month. So it's somewhat tolerable of a negative cash flow. And this is only if you have one property. Imagine having multiple, right? And this is why the logical question now you have to ask yourself is, what are the chances of all those scenarios happening and how long can you hold at these current rates? I would give rent increased by 20%, maybe like less than 25% chance of happening, just mainly because of the sheer number of non-permanent residents Canada's letting into the country right now. So like, 1 in 4. But the second part of the question is, will the Bank of Canada be dropping the rates by 2%, 200 basis points? I give that a very, very low chance, very low. If they do plan on a rate cut, I suspect it would be like 25 basis points at a time or 0.25. And assuming you get one at each of the rate announcements in the next few years or so, you're still well into late 2024 before you get a 2 whole percentage cuts. That's a very long time, right? So how can I see potentially 2% rate cut happening? Well, we hit a hard recession and we need the monetary policies to stimulate the economy. The problem in a recession is how liquid are you then and how secure is your job? Only you know, right? And if you were liquid, you wouldn't even need to sell or contemplate this question right now. Do you see what I mean? This is exactly all the scenarios I've been running through. I've gone through this logical rationale many, many times with many, many people. It's ultimately a business case of probability and your risk tolerance. I'm of the belief that if you're in this situation, it makes sense to liquidate in this market where there is some upward trend and you can liquidate your asset right now. Kind of like just catch the wave, get out of the market, live to fight another day, and don't get bankrupt. And I personally don't think this current uptick is another start of the bull run, a lot of air quotes, or rebound that a lot of people seem to be calling for. And I've shown the data before in the last market watch that this is probably just a normal seasonal uptick. It just feels a little bit more pronounced because we have 23-year low in new listings. And this is why I think this may actually be an opportunity for you to sell if you're a little bit overextended and you're cash flow negative on your portfolio or a couple of your condos. Now, as an extension of the scenario of whether you should sell, this also kind of applies to anyone who may have a mortgage renewal coming up in 2024, right? Where interest rates may come down a little bit, but they're still definitely higher than what you're paying at your current mortgage rate. So the lowest mortgage rate I've seen for uninsured investment properties, meaning you need 20% over it, and it's an investment property, so rate's a little bit higher. It's like 4.89 right now. So you should stress test yourself at the new rates when you come to renewal, because even if you're at the non-Scotiabank, so your monthly payment hasn't changes, on renewal, it will. And if you want to use the calculator I always use to stress test yourself, I'll put a download link in the description. Just go download it and stress test yourself. Otherwise, if you want to chat with me directly to go through your personal situation and determine whether it's worth selling your property or you have the ability to hold on to it, and I actually do tell some clients to hold on to it, you can book a direct call with me using the link that's right here. It's www.chatwithzen.com. Hopefully this gives you some points to think about, if you are in kind of this situation, because it seems to be very common right now. Anyways, hope this helps. Until next time, your move, your future. See ya. Now that I'm done watching this video, I think you should check out this video. And you know what? Why don't you check out this video too?